Hi there, ladies and gentlemen. It's James Marley here, co-founder at Livewire Markets, and welcome to this Fund in Focus. I'm joined today by Morry Waked, Managing Director at Vinva, and we're going to be learning about the Vinva Global Equity Strategy and the Vinva Global Alpha Extension Strategy. Morry, thanks for coming in. Good to chat.
Thanks, James. Thanks for having me.
So for those not familiar with Vinva, can you give us an introduction to the firm?
Yeah, Vinva is a global equity investment manager, founded here in Australia in 2010. But the genesis of the core members of the team date back almost 3 decades now, so a very highly experienced team. The majority of our equity in the firm is owned by our employees, so that's a very strong statement. We have a very strong alignment of interest with our clients, and we remain independent and autonomous in what we do. Our focus is purely on investment performance for our clients.
And Morry, can you tell me a bit about the Vinva team?
Yeah, most importantly, it's all about hiring the right people. Like any investment manager, our investment performance is a function of the investment talent and professionals that we have in the organisation. So the most important decision we make as a firm is hiring people across the firm, in particular the investment team. So it's all about hiring people that are experienced, that have a passion for the investment markets. We're blessed with a really high calibre investment team, and also across the whole firm, because it's our people that come up with the investment ideas, our people that drive the passion for success and to meet or exceed our clients' objectives. So we're very fortunate to have a wonderful team.
And Morry, can you tell me a bit about the investment philosophy and the objective of the funds that you've got?
Firstly, we're a systematic investment manager. And by systematic, we mean we take a range of investment ideas, all grounded in sensibility. That's the most important thing. And we bring them all together and put them into a portfolio investment process that's unemotional. We're objective in our decision making. We're basically trying to get the best of all worlds into our investment process. So there's a range of ideas that we look at, some being fundamental, understanding the fundamentals of a company, the cash flow, the earnings expectations, margin compression expansion, the quality and the strength of the balance sheet, and some certain trends and accounting practices that we see. And then we take into account some macro things where we look at companies around the world and link them across various dimensions. We also look at some sentiment and behavioural. So a range of different sort of insights and put them together in a single investment process that removes emotion and gives us discipline. And our investment philosophy is really based on what we call the fundamental law of active management. And that's really all about delivering ultimately consistent outperformance to our clients. And that's measured in terms of a return to risk ratio. We typically have strategies that deliver high return to risk ratios. And to be able to do that, you've got to do 3 things very well. One is you have to have skill. Clearly you need to be able to differentiate future winners from future losers, being able to rank and forecast stock returns around the globe. The second thing we like it to do is have breadth. There's no point having a great investment idea if you can only implement it across a couple of industries or a couple of markets around the world. We're looking for ideas that are applicable across many, many markets all around the world. And the third component is really around portfolio construction. I'm a big believer that portfolio construction is where the game is won and lost. How do you take return forecasts or stock ranking models and turn them into portfolio holdings? It's not that simple. You don't just buy your best ranked stocks. From our perspective, you've got to take into account risk, you've got to take into account liquidity and transaction costs. And that efficiency component is really, I believe, an important part and a real differentiator for Vinva in terms of how we put our portfolios together for clients.
Okay, can you give me a bit more detail on the portfolios for the long-only fund and the Alpha Extension Fund, please?
Yes, so we've got 2 funds to talk about today. One is the Vinva Global Equity Fund, which is what we refer to as a long-only strategy. All our positions are positive. We either own a stock or don't own it. And the other one is the Vinva Global Alpha Extension Strategy, where we have long positions as stocks that we own. We also are able to create negative positions in companies that we have a negative view on. So that's a distinction between those 2 strategies. The investment philosophy, the investment process, the portfolio construction approach is almost identical between the 2. The difference being with the Alpha Extension, we remove one of the constraints that allows us to hold negative positions in a stock. And the beauty of being able to do that, it really is a more efficient strategy. It opens up more opportunities and more avenues to add value. And we'll talk about that a little bit later, I'm sure. And effectively take advantage of negative insights that we may have in companies around the world, in particular mid and small cap companies where it's hard to get those sort of negative views embedded in a long-only portfolio.
Okay. So hoping you'd bring the process to life for people a little bit. What's an example of an opportunity you've identified?
Yeah, so I brought a slide with us today and it should be up on the screen for our viewers to see. The company is Kering. It's a French luxury brand. It's got brands like Yves Saint Laurent, Alexander McQueen, Gucci, so well-known global brands in the luxury sort of brand market. That's a stock, if you look back over the past 12 months or so, it's been a very strong contributor to our global Alpha extension strategy. It's been one of our better contributors in terms of outperformance. If you look at that stock, its weight in the global equity benchmarks around the world is about 0.02%, very, very small. So if you're running a long-only strategy, as we do, we don't own it in our long-only funds. But in our Alpha extension strategy, we can actually take advantage of our negative view on that company and create a short position. And on average, we've been short close to about 1% over the past 12 to 18 months, and that's been a very rewarding strategy for us. If you look at Kering, and the slide will have a range of bubbles on there, the majority of the insights that we look at don't look very positive for Kering. On a trailing cash flow basis, it's generated some good cash flow in the past, that's a positive. But if you look at its margins going forward, the earnings trends, if you look at things like consumer sentiment, if you look at what's happening in global supply chain and also the luxury market globally, where there's it's a pivotal point for those sort of companies and other trends that we're looking at, it's pretty negative on all those dimensions. It's all those things in aggregate that have given us a negative return forecast or negative view on Kering, and we're able to take advantage of that negative view in our Alpha extension strategy.
Yep. And from a return perspective, what's your benchmark? What are you trying to beat?
They're both benchmarked to global equity benchmarks. For example, the Global Alpha Equity Fund is benchmarked to the MSCI ACWI All Countries Universe ex-Australia. The Alpha extension strategy is benchmarked to the MSCI World Developed Market Index ex-Australia and ex-controversial weapons and tobacco and so forth. But they are both broad-based equity strategies, and we're trying to outperform those benchmarks consistently over time.
What are some of the risks and how do you manage them?
There's two types of risk. One is what we call total risk. So whenever anyone makes a decision to invest in equity markets, what comes with that is equity risk. And equity markets can be volatile from time to time, and certainly, as I'm sure our viewers out there have experienced over the past couple of months, there's been a lot more volatility in equity markets over the past few months than what we saw probably last year. So that's one part of risk. It's very difficult for us to control equity risk. That's sort of like the tide of the ocean, where we're a cork in the ocean and the tide will go up and down. We can't control that. What we can control is what we refer to as active risk. What risks are we taking relative to the benchmark? What overweights and underweights, what active decisions are we taking? That's where we look at risk and what we try and control. And our portfolio really is a pure stock selection strategy, is probably the best way I can describe it. If you look at our global equity strategies, we don't take large country bets, we don't take large industry bets. It's really a strategy or strategies that are designed to take over and underweight positions within industry, within countries around the world, really all about pure stock picking.
Vinva is in partnership with Magellan bringing some funds to the market. The firm's been, I would say, under the radar to an extent. Why you bring these funds to a broader audience?
So I think Vinva, we haven't really had a brand in the retail wholesale market. Our number one objective as an organisation is investment performance. We're not here for the limelight. We're not here to be in the news. We're not here to market ourselves. That's not who we are as an organisation. Our number one priority is to deliver investment outperformance to our clients. In August last year, we did a partnership, a distribution partnership. It's purely a distribution partnership with Magellan. So we maintain our focus on investment management. We retain our independence. But Magellan, and they have a wonderful distribution network and ability and access to the retail wholesale market. So we've partnered with them because we think it's important that the retail wholesale market has access to our quality investment products. And our partnership with Magellan allows us to bring those products that were previously not available to the wholesale market. Now with our partnership with Magellan, they're now available to investors in the wholesale market. We think that's a great positive.
For those people who want to find out more information, where do they go?
There should be a slide that will pop up on the screen now for our viewers. Please head to the website, as you can see on your screen, and access the Vinva funds that way. And any information that you want to know about us, you can find on the Magellan website.
Morry, thanks for coming in and giving us some more information on Vinva's global equity strategies.
Thanks, James. Thanks for having me.
As Morry said, for more information, head to the Magellan website.